If you remember, before the pandemic, the interest rates were at 0.75%. People were getting houses at 2% rate. So 3.75 is good because we've seen 5%, but there's still a lot more room to grow. And if people are still skeptical, still holding on to your money, still, instead of putting it in the economy, they are saving it, or they are hoarding it. Then they would have to cut it a little bit more to push more people to go out, to get more money into the system, to increase our GDP. It's not about this particular cut, it's about the trend. In June, they cut it 25 basis points. In September, they cut it 25 basis points. Now 50 basis points. We are trending in a downwards direction, and hopefully that's enough to ease the labor market, to get more businesses more money, to hire more people. Our current unemployment federally is 6.5%. That is still pretty high. I mean, hopefully with the businesses with more money would hire more people, or even pay them fair wages. Because if people don't have the wages to go out there and spend, you can cut interest rates as much as you want. No one can afford anything. We're not spending because we have it and we don't want to use it. We're spending because we can't afford it. What I believe is, both federally and provincially, yes, you can cut my taxes, but if you put more money into the things that I'm going to spend money on, like childcare, healthcare, education, roads, right? And I mean, I wouldn't mind a tax credit here and there. Then I won't have to spend my money on those things. And then, I mean, I'm thankful for the cuts, but those make a bigger impact in our pockets so that we can keep more money for ourselves to enjoy what we want to enjoy.
Absolutely. Welcome to another episode of Community Update. I am Promise Okoy. Now, the Bank of Canada recently lowered its policy rate to 3.75%, a move that could have major effects on business investment, on consumer loans, stock market, currency value, and of course, inflation.
Today, we lowered the policy rate by 50 basis points. This is our fourth consecutive decrease since June and brings our policy rate to 3.75%. We took a bigger step today because inflation is now back to the 2% target, and we want to keep it close to the target.
To break down what this means to Canadians, we have been joined by Kwasi Asare Adjei, a lead consultant and business policy analyst at Apex Consulting Services, with expertise, of course, in mathematics, in computer science, in accounting. So many hats for you alone. Thank you for joining us on the show.
Pleasure to be here.
Absolutely. With this recent news of this court, you heard that introduction, and I think our viewers would like to know exactly what are the industries that this is going to be impacting and what should we be expecting in the soon coming days.
So, it's to get directly into people's pocket, it takes about 18 to 24 months. Right. But for people with variable mortgages or any variable lending products like a line of credit, home equity line of credit, those, the rate that they pay on interest on a month-to-month or year-to-year basis should reduce their payments, thereby easing up how much they have in their pocket. So they will feel that impact more immediately than, let's say, someone who is renting or just a person on a fixed mortgage. This interest rate cut is supposed to spur economic growth, and with that is when we actually see it coming into.
I think a lot of people who will be too excited to even know how to manage the resources, manage the situation, as it were, and so probably will get tempted to spend more. Is this going to bring about increase in borrowing? And what would be the possible impact on those who will go on that borrowing spree and spending spree and all of that? What would you say about that?
To set the stage, the interest rate is a reduction in the cost of borrowing. But how the Bank of Canada determines whether it's a good time for an interest rate cut is through a complicated set of equations as well as surveys. So before they do it, they've already taken a survey on what people expect inflation should to be, right? How they foresee the future is when they are able to adjust it. I don't think, and I mean, knock on wood here, we will see something like in 2008, where a lot of people were pushed into getting huge debt instruments where they didn't have any way to repay it. I think people are more tempered now, and then they would, before they see it, because there's the fundamental factors that were causing the inflation, some of them are still happening, they would cut their coat according to their side.
Right. There are a lot of people who probably don't have those basic knowledge of the effect or what has just happened. And you find a lot of people talking about just about buying houses and credit card, like you did mention, and all those very few things. Of course, we have the stock exchange as well, the impact on that, the currency value, and all those things. Break it down to the ordinary person, a non-economic experts, in this case. What is it that the Bank of Canada has just done to the person who goes to the store after now to make purchases? What should they be expecting? And you did mention how long it's going to take before we can feel the impact.
So when we borrow, let's start at the business level.
Yeah.
When businesses borrow, right, they pay an interest on what they borrow from, depending on their instrument. It could be fixed or variable.
Variable.
The loans are usually fixed. A line of credit is usually variable. So they take the Bank of Canada rates, and then the bank adds their own markup to it.
Right.
What that would look like for a business would be, now they can spend more of their line of credit. They can actually go to the bank and borrow more so that they can spend that extra money on investment, on technology, on research and development, and on wages as well. And that's where it comes to the everyday person. If the business that you're working for has more money at its disposal, they can afford to pay you more. And if they can afford to pay you more, you can afford to buy what is at the grocery store. But when we go to the grocery store, we are talking about, at the prices of the grocery store, talking about inflation. Does not necessarily mean that the prices at the store is going to come down. Like the crate of eggs you bought for $6.25 would now be $3.25. Not necessarily. What it means is, in the short period of time, let's say a month, it's not going to go to $7.25. You could still be more comfortable in your budgets, right? And that's what the Bank of Canada is trying to get more people to do, to have more security, so that they don't save their money hoping that the prices will go up. They can go out there and spend and then drive economic growth.
And before the interview, you and I were having, the chat around all those things and what the implication, basically. Let's take it up a little bit higher to the investment as part of it, foreign investment in this case. What are the specific industries you think this will benefit in most? Is it just going to be around the housing? Is it going to be infrastructural development? What exactly do you think, or what areas do you think will benefit from this growth, from this cut immediately?
The purchasing of housing is interest rate sensitive.
Yeah.
So you directly see it. It's cheaper to go and borrow $500,000 to buy a house. Let's say you want to get a house on a mortgage and flip it. If that is your business, it's cheaper to get that now. If you want to, buy a house and rent, it's easier to do that now, right? By 50 basis points, right? However, when it comes to in all other industries, the effects will be like what I just mentioned. It will spread across evenly, unless when you are dealing with imports and exports, because the reduction in the interest rate also affects the currency. So it will be harder it'll be easier to, you get more exports, but it'll be harder to import because of how the Canadian dollar will peg against the other currencies.
Right. But I guess what you're saying is that people who are first-time home buyers, for instance, it will be the right time for them to get into the market and begin to look for a house because it's going to be a bit cheaper for them, right?
Yes.
Given the interest rate, because I mean we're somewhere around over 6%
Yes.
the interest rate.
Yeah.
But so in doing this as well, do you have any advice for them? Because people shouldn't just rush out there and just begin to spend and borrow and all that stuff. What would be an economic advice for this set of people?
I would like to emphasize that interest rate is one thing about when it comes to borrowing for a house. But in terms of the prices of housing, there's a host of other factors. So if you're going there if you already have a house that you want, it's within your price range and you want to get a mortgage, it's easier for you. But if you say, okay, now that the interest rates are coming down, I'm now going to look for the houses because the prices of the houses should be easier, should be cheaper. That is not what is happening. It will be easier on your income to qualify for the house that you want. But it does not necessarily mean those prices will come down because there are other factors that are involved in getting mortgages are the wages that you are getting from your business.
Right.
There's a supply issue. There's actually an issue with having the technical capabilities, people with the technical capabilities to build the houses.
Right.
So all those factors, those can be mitigated through pressure on your local officials, pressure on the government. The interest rate is only dealing with the bank's side of the equation, but it's not necessarily going to bring the house that was $300,000 to $500,000 down to $300,000.
We should be expecting that to happen. That would be like a miracle, right?
Yes.
Let's get into stock market. You did mention that one of the ways you can have money in your pocket is through the stock, right? And one is wondering, how is stock going to react to this cut? And are there going to be some kind of rise in these activities within this sector of the economy? What do you think?
Depending on the stock instruments that you are invested in, right? The good thing about the cut was it's a cut, but it's not too much to, destabilize the system. And they know what I mean. They went to school for it. They know what they are doing. So if you are invested in more debt instruments, let's say bonds, right, where it involves you lending money to someone to get a regular payment and payment back of the principal at the end of the day, then you should be affected because now the amount that you get on regular payments it's going to be a bit lower.
Yeah.
Right? You still get your principal. But if you invested in stocks, right, because this is to drive consumption, to drive economic growth, you would be able to, it would increase your stock valuation because the company that you're investing in or the mutual funds or the ETF that you're investing in is actually making more money. So an example would be, to illustrate my point actually, would be, let's say you're investing in milk.
Okay.
Like, a milk manufacturer or a farmer who is publicly traded selling milk. Now that farmer has more access to capital to borrow to, increase their technology to expand their farm. They have more access to capital to invest in. Therefore, they can produce more milk. And now people have more money, a bit more money to go out there and spend. And then they can buy the supply that the farmer is putting in. Therefore, you holding the stock for the farmer would make your stock value go up.
Go up, okay.
Exactly.
Yeah. And how about the currency value? What impact does it also have on the currency value?
Luckily for us, the Canadian currency, the Canadian dollar is very robust. It's by very robust, it's resistant to change. I mean, everybody wants the US dollar, but it's right there with it. The biggest issue would be as the Canadian dollar in relation to a US dollar, which is our largest trading and investment partner. However, the rate cut was not enough to change the 70 cents, 70 cents to every dollar interest rates. It's not going to change it significantly by 50 basis points. If you had dropped it by 200 basis points, I mean 2%, then we are talking about that. But in terms of our balance of trade with the US, it should be enough to keep it stable, especially now that it will make it cheaper to export.
It's interesting to know that these are the things that play out economically and all that. But one is wondering again, is this going to stay? How long do you think we will have to celebrate these cuts? Are we expecting this also to impact on inflation? And how is that going to be possible?
The whole idea is to bring inflation up. And I know that sounds like no one wants to hear that.
I mean, not everybody wants to hear that.
No one wants to hear the government, the Bank of Canada wants to bring inflation up. But what I mean is, they have a mandate to keep inflation in the middle of 1% and 3%.
Okay.
Right now, it's at 1.6%, in spite of the cuts.
The cut, okay.
Right? That means...
But that just happened recently, so...
Yes.
Probably some impact will be felt much later.
Yeah, I mean, in spite of the higher interest rate that we have. Because it's been at 5%, it was at 5% since September 2023.
That's right.
Right? So 5%. So even though it was harder to borrow, inflation was still going down. So making it easier to borrow means we have a demand, we incentivize demand, we make people want to get more things, therefore making them bid for the more basket of goods that's there, and then push inflation to 2%. If inflation coming down is a good thing if it's at 7%, like it was, we know how it is. Yeah. But if it goes down to 1% to 0%, then we're talking about economic instability.
We start getting worried again.
Yeah, yes.
So we're trying to balance things out, right? Not too much here, not too much there. Yeah,
right.
I say.
So if people go out there and obviously spend within their means, create more demand, take your shop local.
Yeah.
Take your wife out to a restaurant, enjoy life. We are helping the economy and we're helping the GDP. And obviously we're helping our relationships.
Absolutely. I agree with you on that
one. The bank, Tiff Macklin, the governor of the Bank of Canada, is saying that in their next meeting in December, they're going to reevaluate. And most likely the cuts are trending
downwards. Is it?
If you remember, before the pandemic, the interest rates were at 0.75%.
I know.
People were getting houses at 2% rate. So 3.75 is good because we've seen 5%, but there's still a lot more room to grow. And if people are still skeptical, still holding on to your money, still instead of putting it in the economy, they are saving it, or they are hoarding it.
Yeah.
Then they would have to cut it a little bit more to push more people to go out, to get more money into the system, to increase our GDP.
Yeah.
So they have to track the economic growth numbers.
Yeah.
And then, but it's not about this particular cut, it's about the trend. In June, they cut it 25 basis points.
Yeah.
In September, they cut it 25 basis points. Now 50 basis points. We are trending in a downwards direction, and hopefully that's enough to ease the labor market too, get more businesses, more money to hire more people.
Yeah. And
then more money to invest in their products.
Yeah, talking about hiring people, I was like, okay, is this also going to impact the employment rate that we currently have right now? Because a lot of, especially in the province here, Nova Scotia, we seem to have reasonably high rate of unemployment.
Yeah. Yes. Our current unemployment federally is 6.5%. So that is actually also still pretty high.
Yeah.
So I mean, hopefully with the businesses with more money would hire more people, but as to whether they actually would is the issue, and or even pay them fair wages, because if
Fair
people
wages,
don't
yeah.
have
Yeah.
the wages to go out there and spend, you can cut interest rates as much as you want. No one can afford anything. We're not spending because we have and we don't want to use it. We are
That's
spending
right.
because we can't
We
afford
can't
it.
afford it. Yeah, I agree.
You
But
know.
we're going to wrap up very quickly on this point. This has to do with the province here. We also got that news that there will be a cut on HST from 15% down to 14. What do you make of it?
I mean, that's we.
Well, you're so excited.
Yeah, in my household, we always like cuts. Right? I not expense cuts, but we like cuts of,
yeah.
tax
Yeah.
cuts.
So what does that mean to an ordinary Nova Scotian?
So let's say you go and buy groceries.
Yeah.
You've already spent $100. Now you are going to pay an extra 15%. But now you have to pay starting April 1st, because they've given the CRA 6 months for it to take effect. Starting
Right.
April 1st, you're going to pay 14%. So it means more money into your pocket, right? But so you choose what you want to do with that money, but as to whether the budgetary feasibility of it is what I mean they have to take into account.
Right.
What I believe in, both federally and provincially, yes, you can cut my taxes, but if you put more money into the things that I'm going to spend money on, like childcare, healthcare, education, roads, right? And I mean, I wouldn't mind a tax credit here and there. Then I won't have to spend my money on those things. And then, I mean, I'm thankful for the cuts, but those will make a bigger impact in our pockets, so that we can keep more money for ourselves to enjoy what we want to enjoy.
Absolutely. And like I said, a lot of people are already advocating for further cuts on that one, the HST, maybe to 10 or so. Who knows?
I mean, Alberta did it. So
We're not Alberta yet.
we don't have the oil.
Kwasi, thank you so much for stopping by and sharing your expertise on this particular topic.
It was
Thank you.
great
It's
to
been my
be
pleasure
here.
indeed. Thank you very much. Right, that wraps up today's discussion. If you found this conversation helpful, be sure to subscribe to our channel for more insights and updates. And thanks for watching. I am Promise Okoy, and I will see you soon on Community Update. Take care.